Abhay, hi, good to have you with us. How have you been?
Good. Thank you, Ashu, for having me. I've been good. I hope the same for you also.
Well, yes, Abhay, I think God has been kind, and I think these are difficult times, right? But
Sure.
things are getting back to normal. So excited about the newer possibilities, right? The world coming back to normal in general,
Yep.
right? Abhay, excited to have you with us at Asiatic Journal. This is a session that I've been looking forward to. Not on a lot of occasions do we get to host our speakers with phenomenal experience, right, in the secondary markets, and then of course, playing in a very focused way in the new emerging startup ecosystem, right? This becomes an important conversation at that level, and
Sure.
of course, we're going to cover in this conversation about a lot of macros, a lot of shift, which is, for example, happening. Right, last 2 years have been
Sure.
absolutely exceptional. We're going to be talking about a lot of that, right? And like I said, the newer emerging world order, right, which is
Sure.
a bit less in many ways, right? And I think an
Yeah.
exponential possibility that it kind of presents from a value creation standpoint. So we're going to talk about all of that. But before we do that, Abhay, a quick round of introduction will be very helpful as
Yeah.
a starting point, and we dive into the discussion from there on.
So thank you, Ashu, first of all, for having me. It's great to be talking to you. I do talk to media, but this kind of show really, I think, forces the thinking and brings out nuances which the general media is not able to bring out. So very happy to have this
Right.
conversation. In terms of background of Piper Serica, I'll go before that also. So I finished my business school in '93. I joined Citibank, and at a ripe old age of 23 years, I was given the job of managing a $50 million fund by Citibank that was just set up of Citibank's books. And this was a secondary market fund. And I ran that from 93 to 98. That fund did very well. And then I was offered an opportunity to work with one of India's first private equity funds, which was a joint venture between George Soros and Chase Bank. So I ran that in India and in Hong Kong and Singapore. And in early 2000s, I used to travel to China and was just, fascinated by the kind of growth that was coming in China.
Right.
2003, 2004, I came back to India. I started Piper Serica as an asset management company. And where we are now is we manage, a PMS, SEBI-registered PMS, a Mauritius fund. And then we also have recently launched our own Category 1 AIF, which is the Piper Serica Angel Investment Fund. So that's the quick background. And we are basically long-only investors, growth investors, looking for growth, looking for companies that are using technology, especially in a very effective way, either for internal processes or for their business operations. So that's what the fund's focus is.
Super, super. I mean, like I said, right, super excited to work for this conversation, right? I am tempted, right? Not a lot of people have the kind of experience of operating in the secondary markets, right? Because secondary markets are extremely, extremely dynamic, right?
Sure.
The kind of transparency, the
Sure.
information flow, that happens there, right? And then, there is this very opaque, market, which is, of course, coming out of its inefficiencies, right? Which is the early stage ecosystem, right?
Yeah.
Not a lot of people are in that zone, right? Who understand, who get to play both of these sides, right?
Right.
So excited about this discussion, Abhay. My first question to you, right? In this session, right? Now, 2020 has been a very unreal year, right? And I think no conversation today can be
Yeah.
complete without talking of 2020, right? I think it's bringing in a very, very different kind of change, right? We from being a dependent economy, right, where we needed information from a lot of people, we've actually become an information first economy, right? Where
Yeah.
and that's largely happened because of, say, cheap data and mobile phone penetration, so on and so forth, right? And the good part was we got time, right? Everybody was essentially on just about 3 or 4
Yeah.
screens. That's made us a very, very different kind of an economy, right? Our appetite is kind of peaking, right?
Sure.
How do you see that? What's your sense of it, right? How is this transition, for example? How are you, for example, dissecting this transition that has happened in a very, very large shift, right? We're a last billion people market. How excited are you from an opportunity standpoint?
Look, so the last sentence you said, how excited I am. I'm super excited. And I'm 51 years old. My team is quite young. Maybe they don't see it the way I see it, but I think this decade is just going to be phenomenal. And
Right.
one, huge silver lining of COVID and lockdowns and all was that it actually pushed our tech learning, it crunched many years of learning, probably 5 years of learning into a very short span. And,
Sure.
uh, if you look at the statistics, the demographics of India, it's the youngest country in the world. Median age is 29 years of age. 70% of the country is below 40 years of age. And no other, even China is aging, Japan is well aged, Europe is aging, US is aging, and here we are, getting younger. And what we saw is that there was a remarkable adaptation to tech through phone apps and especially mobile. And everybody got into mobile. Data became cheaper. We went from, the rates dropped by, became, close to 3% of what they were. So you can imagine 97% drop in data rates. And that has driven the whole country. OTT apps, you call it transactional apps, fintech, education tech, every kind of tech. And in our public market also, we have, portfolio and even the private portfolio, we have been backing that trend. So we have seen in savings, money coming in through Zerodha, Upstocks, angel broking, which is one of our largest holdings, which is the largest holding in our portfolio. CDSL opening demat accounts to trade. We have seen this remarkable transition, and I don't think this is going to stop. I think we're just getting started, and a lot of old businesses are struggling who are not able to transition. But I think this is going to be a very exciting decade. Anybody who understands disruption, anybody who's ready to back and bet on transition is going to make money. That's my view.
Very interesting how you put it, right? And I particularly like the point that you kind of highlighted, right? That businesses who are not necessarily who understood the shift, who not necessarily are savvy, right? I think are going to have a very difficult time, right? Whether they go extinct or not, I think is I think a far-fetched call right now. Yeah. But they can have a difficult time, right? I want to basically talk a little further on that, right? And this also becomes a foundational question to the next bunch of questions that we're going to have, right? More about the startup ecosystem, more about technology, right? Now, what has happened is, and I completely agree with what you're saying, right? That we are essentially headed into a consumer or a consumption phase, right? Next 10 years, next decade is going to be massively there, right? Now, what has happened is there are two trends that I'm kind of seeing, right? And I am not. I have a thesis, right? But India is a market with many layers, right? You really cannot have a homogeneous thesis, right? What the last 1 year has done, or last 2 years have done, is that they've brought us to just about 4 or 5 screens, right? Now, what that has done is that has aspirationally, we kind of peaking, right? Because now we have information awareness, right? Unlike a broken ecosystem, which earlier used to be, right? Where physical interaction was predominantly the way of engaging, right? Here, your exposure is irrespective of the market that you're in, be it a tier A city or a tier 2 city, right? You just have phenomenal exposure now, right? We've solved for logistics. So, for example, 44,000, 45,000 pin codes today are serviceable, right? Which essentially means a kid sitting in a Kanpur or a Lucknow is equally sharp, we say a kid in Delhi, right? Which earlier did not used to be a case, right? Now, when I look at that, it's absolutely phenomenal, right? And I think we concur on that point, right? But when I start to look at the backend, right, which is say the manufacturing backend, larger organizations who've typically had a certain process, right, where products were conceived of, the anticipation and the understanding was that they're going to have a life cycle of say 5-6 years, then the product is going to peak, and then they're going to re-engineer that product, right, and the new product is going to come in, right. We are essentially in a very different ecosystem, right. Our backend is not necessarily supportive of the aspirational elements that we're going to see in the economy, right. Now, this is something which is going to impact the secondary markets, SMEs, MSMEs in general, right, and also the startup ecosystem, right. And and I think we can kind of put it in a way that this is something which is going to change how businesses operate in general, right? What's your sense of it? How do you kind of see it? I mean, I am, like I said, right? Aspirationally, we're peaking. Backend is not necessarily aligned to that, right? Which is a huge gap, which is now kind of coming. Do you think that's brewing to be a very large problem, and they make us more dependent on say external economies, and they'll open up those possibilities of imports? We could lose out in the process. Our innovation could lose us in the process. What's your sense of it? How do you view it?
No, I think the question is absolutely a fantastic question, and I'll tell you why. Because we were worried about the same thing. That look, there are logistical issues, and there are supply chain issues, and there are distribution issues, and there is product getting manufactured in deep south, and it's required in up north. How does it get there? Will it slow down the growth? Will we, as a country, lose growth? But I'll tell you, it's remarkable what has happened. Over the last 6 months, 9 months, I've seen local entrepreneurs. And local entrepreneurs, these are not guys, who have been in a particular small town. So I'll give you an example. We just invested in a company based in Gorakhpur. What it is doing is that for street shop vendors in UP, in Lucknow, Kanpur, Gorakhpur, they have started this app that gets them their products that they need, atta, dal, rice, and through an app, so they can order. So what is happening, Ashu, is that we are seeing local economies develop, that are not so dependent on, a large FMCG company sending its products and then only it will get consumed. Local, there is amazing number of local brands which are coming up, city specific brands, lower, cheaper in cost, more suited to domestic taste. So what is happening is that now the India that we know is breaking up, not in a bad way, in a good way, that it is getting self-dependent, that it is whatever needs to be physically consumed. Online, you can consume anything anywhere, doesn't matter, logistics are there. But for physical product consumption, there are very vibrant domestic markets that are getting set. And then there are a lot of young companies like Fleetex and, Blackbird who are coming in and revamping the whole, logistic issue also. So I think this is the future, that, people will solve this problem by making sure that the local producers are catering to local consumers, and not dependent on cross-country mobilization of stuff.
Very interesting. Very interesting. Abhay, one question that becomes very important, I think, in when we're kind of discussing a very overall macro shape and the appetite of the economy, right? One question becomes very, very important, right? Is the overall rate of savings, right? I think last 2 years, we've had some very, very pertinent issues, right? For example, employment has been a very pertinent issue, right? There are no clear answers, right? It's very difficult a problem to solve, right? Because of a lot of complexities, right? We still have a developing economy in many ways. Savings rate is something which is a large part of the country has essentially been eating out of savings, right? So while of course we talk of, say, this entire the infrastructure that has come together, the aspirational elements that have come together, right? I think we still are low when it comes to the disposable incomes, right? The economy from a consumption standpoint, right? What's your sense of it, right? Because that becomes a key enabler, right? Now, from a startup eco standpoint, a lot of venture capital funds have poured in a lot of capital, right? What that has led into is basically, giving a lot of, for example, say, experiential engagement, right? Free of cost, early on to onboard and change the behavior and so on and so forth, right?
Yeah.
Now that is not necessarily sustainable, right? Eventually, you are looking at, the per capita income increase, people going out buying, consuming, right? The demand is getting institutionalized, right? But some of these very critical elements are not necessarily moving. Do you think they could potentially result into a delayed demand behavior, possibly an element of destruction? What's your sense of it, right? Because this is the decade that we're kind of talking about, right? Beyond this, our age mean will peak, right? Our consumption will start to drop, right? Which is essentially a very European problem, and even to an extent, what Japan is kind of facing, right? What's your sense of it? How do you see that? And is that like a big area of concern, or that could possibly be a temporary worry that could fade away in, say, next possibly a year and a half as things get back to normal? What's your sense of it?
Yeah, I think the whole we are so young as a country that a lot of data sets are still becoming clearer. Consumer behavior is becoming clearer as we get better data. Yes, of course, anybody would agree with you completely that there is a mismatch between aspirations that have been raised and at the same time the opportunities to fulfill those aspirations through either education or employment or the opportunities. And traditionally what would happen is that people from smaller cities would migrate to bigger cities to chase those aspirations, to get better jobs, better employment, better life for their family. I think that is going to be a concern in India for next 10 years. It's not going to go away. I mean, there is no magic wand that's going to fix it. So earlier what used to happen, and that is a good change, is that a lot of it was left to the government and to public sector enterprises and say, guys, you fix it. You give us school, you give us basic necessities, food, clothing, jobs, schooling, healthcare, insurance. Everything should come from you at a subsidized cost. But now we are seeing that private sector is coming up and picking up that burden, from education to healthcare, and healthcare is now getting deeper and deeper. A lot of companies are using tech, so people in small cities do not have to travel to large cities only to get diagnosed by doctors. You can do it through Apollo Hospitals 24/7 app. So a lot of distance is getting covered that way. So I think this will be an evolving situation for many years. But what I'm hopeful is that, and I'm seeing that there is a very large number of young entrepreneurs who are coming up and they are filling these gaps. They are filling in these gaps through social commerce. Let's take an example. There's a company called Oila, which is letting housewives sell refurbished clothes for cheap. So there are entrepreneurs, and these are very smart, savvy entrepreneurs, and first time they have access to capital. Even 10 years back there was no access to capital. I may have the best idea in the world, but who will give me money? But now there is money chasing these guys because people have seen success. They have seen Zomato, Nykaa, Paytm kind of big stories. There's foreign capital that is available. And I frankly think India is now what China was in early 2000s, before Alibaba or came up, or before Yemin set up ByteDance, and some of these other big companies who are now $500 billion came up. It was like this, and now we are hitting that same sweet spot of entrepreneurs coming in and filling in these gaps. So it's a long question to your answer.
Right. I completely understand.
That is what I see happening, frankly.
Very interesting. Very interesting. Abhay, before we move into discussing about startups and some of the amazing investments that you've made, right, and how you kind of how that portfolio swelled. Some of those calls, the thesis, right? I'd love to talk to you about Piper Serica, right? Now, you're managing a very large AUM there. Of course, I would want you to talk about that. The thesis there, right? And what are some of the areas that you're looking at, right? Because Piper Serica as the parent is essentially focused towards the secondary market investments, right? So I'd love you to talk a little about that. And from 2020 onwards, how is for example, say your say thesis shifted, right? Because I think when you talk of every AMC, any AMC, all PMSs, I think everybody is just taking, has stopped short and kind of reevaluating and reassessing how the portfolio should look like, right? I'd love to understand in your case, how is that coming about?
So 2020 was something that probably you see once in 100 years, and we saw it, unfortunately. I remember in March 2020, the markets crashed all over, and there was a global shutdown. And what we did is we normally do not churn our portfolios too much. We like to make long-term bet on companies that we think will grow for next 10, 15 years because they have caught the right trend, and they are the leaders in that trend. But when we saw lockdowns coming up and we saw situation getting worse, what we did is we exited some of the companies which were consumer oriented, like Phoenix Mills, which went through a lockdown, or PVR Cinemas, or Indigo Airlines, or VIP. We exited these stocks because we realized that, look, this is going to be a prolonged pain. There is nobody knows when it's going to open up and when these companies are able to get customers in. And at the same time, the other trend we saw is that because people were at home, and as you rightly said, that people were sitting at home and they learned technology, they learned apps, they learned data became cheaper. So we added to our portfolio that time companies we thought were leaders in that space. So companies like CDSL or InfoEdge, or Angel Broking later on, India Mart, kind of companies which we thought will benefit actually from these lockdowns because the tech adoption will be faster and the consumers will be forced to go online to spend money. So that's the transition we made. We are happy that we caught that wave at that point of time. Apollo Hospital is another example, a great play on tech. and we have stayed with these companies since then because we believe that using tech they are driving cost efficiencies. They are becoming more competitive. They are being very innovative in terms of new product launches. And that's the trend we believe, that I personally believe will continue to play out for next 5 years.
Very interesting. But how difficult has long-term investing become, right? We are. The kind of times that we've seen, right? I think it's just so difficult. I used to love asking founders, promoters a 5-year question, right? I have shrunk my question to a 2-year question, but it's just the visibility is so, it's become so dynamic, right? Fads are going to fly fast. You really don't know what's going to become inefficient, right? How difficult has that become for you? And sitting here, I can, while I question you this, right, I can only imagine how difficult it is, right? But I'd love to hear from you, right? How has that changed, right? And you've had a fairly long career, right? And you set your own systems, right, and your processes in place. How difficult has this become? I'd love to understand that.
Yeah, so I think if you have a process in place, first of all, that guides you a lot, and that takes away a lot of biases. That as an individual they creep in. Even in a teams also have biases. So what we have done is, we have a very robust process of managing our funds and making investment decisions, and that process is very well defined. So nobody can bypass that process. Even me as the chief allocator, fund manager, I don't have the ability to bypass that process. So what we do is we filter each investor, each company that we are looking at through Michael Porter's 5 forces model. And that is something that we have converted into a decision-making tool, where we rate each company on a score of 1:10, 10 being best, on 35 parameters. And these 35 parameters include some of the items that you mentioned, that what is the threat of a new entrant? What is the threat of new technology? Can somebody, a competitor use something or launch something that can disrupt you in a big time? Or are you the disruptor? So when we do this assessment, we realize that, some companies and the management, and this is now a very important point, that a lot of people do not understand when we say it. And hopefully, I'm happy that you asked me this question. What we do is we try to understand the tech roadmap of these companies. What means is that we want to see because every company says, no company will say that, look, we are not focused on tech. Go and meet anybody. Everybody says, yes, we have a tech plan. We want to do this and we will do this and that. But then when you deep dive, when you say, okay, can I meet your CTO? And how senior is your CTO? Is CTO part of the board? Is your CTO driving the strategy? Is your business strategy and tech strategy, are they intermingled? Or are they separate? Like you have hired some CTO and tech people who do something on the side, and then you guys are doing, the business is driven by the older generation members. So there is no match. And that is where we see big gaps in very traditional companies, because they pay lip service, but they do not do anything beyond that. So you're absolutely right. It's a very dynamic environment. And the classic examples are like, General Motors, Ford, Toyotas of the world, and Tesla on the other side. And they're still struggling. Tesla is on its own and the other guys are struggling. We see the same thing in Indian, vehicle industry also. You look at the old guys like Bajajes and, Hero Hondas getting left behind by the new EV two-wheeler companies who are taking market share every day. So that is why it becomes challenging, but at the same time, it's fun also. Once you get it, once you figure out what are the right questions to ask, then it becomes more fun also.
I completely agree. I think there's no bigger thrill than to predict, right, and get it right. I think there's a moment of self-actualization there, right? And I think in these times, just about a handful of people, are able to sort of just bring it all together, right? And I think these are people, and possibly, you're uniquely a part of it, Abhay, because it becomes so much more important to understand, what's happening in the startup ecosystem, right? From being a fringe that it was to becoming very, very mainstream, right? We've seen a massive amount of influx of capital, right, pouring into India last 2 years. We've seen as if this is gold rush, right? Which I think it is, right? The size that we are, the kind of appetite that we have, right? we haven't really seen this kind of confidence, this kind of rush, right? And that's largely because, because of, content has brought in a certain sense of homogeneity. People have been at home, right? Something that you alluded to in the process. I think that's just opened up a window for, newer, nimble companies to go out and really, really operate, right? Now, you've created, you've been investing in your personal capacity as an angel investor, and now you've created an AIF, which is of 100 crores, right? You're going to be investing in technology-led deep tech businesses, which are largely solving for this complex market that we're kind of talking about, right? I'd love to understand the thesis there. Abhay, you are uniquely positioned, right? Largely because you understand the inefficiencies that the larger listed entities are kind of grappling with, right? It becomes easy for you, or not so easy. I'll let you answer that, to identify these players far more sharply, who are solving for these issues, right? What's the fund thesis here? What are the ones that you're going after, right? What are those sectors that are a priority when you're talking of an early stage fund? I'd love to understand that.
So our core strategy, if I can say, that core objective is to invest in companies that have exponential business models, not linear growth business models. So what I mean by that is companies that once they become successful, do not have to keep raising new capital to fund their growth. So we want companies that once they have established, created success, can then grow exponentially. And these are the companies that break the relationship between capital input and output. So the output can be phenomenally more, and the input doesn't need to grow as much. So the focus is completely on that. And what that means is that we are restricting ourselves then to largely companies that are into bits rather than atoms. So companies that have physical products, new physical products, we will not be interested in, because they need to carry inventory, they need to build feet on street, they need to build distribution, supply chain, warehouses, which requires a lot of capital. We don't think as small investors, we will be able to do that. So what we want to do is to invest in companies that are coming up with phenomenal tech-based, whether it's SaaS or as an app, or of solutions to an existing large space that is catered to by traditional service providers, and disrupting that space using technology. So it could be in, like recently we invested in a company that is into hiring solutions. So a lot of HR heads, when they get resumes, they have to go through 100 resumes, and then they filter it, and then they shortlist it. So this is an AI/ML driven product that filters the resumes and prioritizes them, saying that, look, this is the top 5, this is the next 5, and this is the next 5. So it does that job for an HR manager, which saves a lot of time for the HR managers, doing the basic routine stuff. Or companies that are, providing building for Bharat, or, the second tier cities, using again technology to reach out and reduce the price points. So the focus is on companies and founders who are doing this kind of disruption. And then we are not really sector agnostic, as long as we are basically sector agnostic, because as long as we believe that even within a big sector, there is a space that these guys have identified, and they are up to it. And a CTO is part of the founding team. That is something that we will never compromise on, because we don't want an old founding team coming from the domain with 30 years of experience, but having no tech person, or a tech person is a junior person. So we want to see the founder being a large equity holder, the CTO being one of the founding team members. That is very critical for it, because we have seen whenever we have got this kind of setup, we have been successful. And then the basic hygiene factors come in, that, what is the drive, what is the, how well these guys connect in the ecosystem, what is the probability of being able to raise the next round, are discussions already on, and all those things come into play. We always want to see a product market fit. So though we are early stage investors, we are not going to fund a business plan, so we want to be able to do some customer referencing, customers saying that, look, I used it, I like it. I'm going to
Right.
use more of it, and this is what I'm willing to pay for it because this is my ROI. So we want to do that diligence, and then also we are very keen to co-invest with other larger investors. So we are happy to
Right.
be part of founder syndicates and be amiable investors along with them. So this is basically our strategy that we can build a
Interesting.
portfolio of a large number of startups over next couple of years, and then take it from there.
Interesting. I mean, I want to particularly talk to you about two things, right? Now, there are two trends that are playing out when you talk about startup investing, right? And I think that's happening in general in the market, right? Now, when we talk of B2B investing, there's this a lot of excitement and exuberance around B2B startups, right?
Yes.
Now, my thesis is, and my understanding is that when you're operating in a B2B environment, right? Essentially, for any other business that you're solving for, right? Their profitability and their profits are largely dependent on how much can they squeeze out of you, right?
Yes.
And in a market like India, which is extremely capital starved, right? Um, and we're not an easy market to kind of operate in, right? That essentially means that the companies are kind of operating with a very low capital base, right? And they continue, and for that reason, they continue to defer, say, for example, adoption of technology unless it comes for free and so on and so forth, right? Now, there are two things that stem out of it. One is that when you're operating in a B2B environment, right? Either you have to make it free of sorts for other businesses to adopt. That's number one. Number two, price it very, very efficiently, right? Now, that could mean, you spoke of not being linear, looking at companies that are in exponential sort of have certain that kind of growth. While the engagement could essentially be that, it might not necessarily percolate into revenues for that particular business, right, which you funded for that particular startup, right? Now, how do you view it in an India market context, right? Because we are a large economy, inward-looking
Yeah.
economy, right? We have a huge base to sort of solve for, right? What's your sense of it? How do you see this particular problem when you're assessing a business? I'd love to understand that.
No, I think you nailed it when you said B2B business is tougher, especially in India, because what happens is the buyers, the corporate buyers in India are very fussy, especially when it comes to paying, compared to the global buyers who have a different cost structure, and different way of engaging with vendors.
Plus currency arbitrage.
So, yeah, absolutely. So I think what happens is in India is that you need to be very careful that the product that you are taking to your corporate customers has to have a seriously high ROI. You can't take a low ROI product and expect to make money, because it has to because in India the bigger problem is that the large buyers are not keen to change. They don't like to try new stuff. They are happy with old relationships. They like the touch and feel of human. Human touch and feel is very important. They have relationships. They have friends. So it's very difficult to break into Indian B2B system. Because the only way you can do it is if you find a customer who really wants to, who's into an existential crisis, or struggling with with in a competitive environment where everybody else is changing and they are not. So that is when, or there is a regulatory change or something that forces them to look for a service provider. So I think B2B space in India for Indian customers is a tough space, and I think anybody who gets into that space has to be very patient in their approach. You have it. The sales cycles are long. We have seen the sales cycle are long, and the upsides are also high because you can scale up much faster once you get the right product market fit and referencing, and then everybody adapts. But to get there, it does take time. You have to do a lot of free pilots because nobody in India pays for pilots. So that is another big challenge for startups, that that how long and you want to do the pilot for, and how much you have to pay for those pilots. So all those challenges are there. So we personally prefer companies that are solving a B2B, or accessing the international market for a B2B customer base. Not really excited about a company that says that, look, my clients are B2B clients in India. That is a pretty hard space to be, I would say.
Interesting. I mean, there's one more shift that has happened, right? With all of, for example, this entire infrastructure that has come together, right? And some of these companies that you funded, right? You've been an early investor in. uh, we are essentially now entered a product economy phase, right? And that's the reason we're kind of seeing a lot of, D2C startups that have come up, right? There's this amazing shift which has happened, right? And that's largely because now this infrastructure can carry a lot of these products, right? Eventually to the consumer, right?
Yes.
And the consumer is also getting very creative, right? They're getting experiential in many ways. At least the urban audience, right, where there is disposable income, there's affordability. There's this shift which is kind of happened, right? I mean, we're seeing it in parts and bits and pieces in tier two cities as well, but I think this shift is very very interesting. Now,
Yes.
what has happened is because of say domestic capital now kind of moving in, and that's largely because there have been large payouts, exits that have happened,
Yeah.
and of course international kind of capital, global capital coming in right through funds. What has happened is that cost of acquisition for product companies have gone up, right, and it's gone up through the
Mm.
roof, right. Your CAC has gone through the roof. It's not necessarily an easy ecosystem to kind of operate it, right. And
Yes.
this is more on the T2C side of things, right. When I kind of talk about that, right, your mechanics of acquiring a consumer essentially are just about three or four avenues, right, where you essentially going to be pouring in more money. And these are platforms, right? These are social media platforms largely where all of these businesses are acquiring customers from, right? What's your sense of it, right? Do you think this deluge of capital, this overwhelming capital injection that has happened, right? A lot of domestic investors, like I said, who are coming in and supporting these founders, right, will possibly kill creativity because the guys who are better funded will go on to raise more. Who have, for example, who have more capital will continue to raise the bar for the smaller guys, right?
Yes.
So, do you think
Yes.
that could disrupt that ecosystem and just possibly skew this in the favor of ones with more money? Or do you think creativity will still continue to sort of hold forth? And there are larger brands who are more creative in nature will possibly carve their own niche and have the ability to become larger, right? How are you looking at that as a possibility?
No, I think in the spaces that have already grown very rapidly, whether you call it social commerce or e-commerce or BNPL or
Right.
payment systems or shipping and all these other and edutech and all. I think the companies that have already created leadership positions there and are well funded will be very difficult to compete against.
Sure.
So we have seen, like, let's take education tech as an example. Against Byju's, we have seen 150 companies
Right.
in education space coming in and playing in small niches. Nobody can
Sure.
go and compete against Byju's. So somebody says that, okay, I will do competitive exams only. Somebody says I will do tuition led program only. So people are picking niches and small spaces which are also large for them to play in. Somebody
Right.
says I will work only on international education, international admissions for
Sure.
Indian students, because that is a very fragmented market, working through
Right.
council. So people are figuring out creatively how do you play into large spaces, small parts of large spaces, and not go against the big guy head on. So I think that will continue. But yes, now over the last 4 or 5 years, the guys who have become bigger, like Zomato in delivery space, it's only Zomato and Swiggy. I don't think there is possibility for anybody else to come in. In payment systems, it's Paytm, who has 3.5 crore
Phone Pay,
customers
Google Pay.
already. Yeah,
Right.
Google Pay is there, but again, smaller. Paytm is so huge now that then I don't think anybody's going to launch a Paytm payment gateway.
Sure.
So I think a lot of these large places are taken up already. But again, there are other places that will come up. There are other opportunities like food and beverages. We are seeing huge fragmented
Right.
market. There are opportunities there. People are playing through dark kitchens and different ways. So I think opportunities are also there.
Interesting.
And they will always be there for creative people.
I'm gonna speak with you on that particular point in just a bit, right? But before I do that, I'd love to understand you. Early stage investing is a lot about the founders and the promoting team, right? Which is
Yes,
at it.
yes,
Um,
absolutely.
I mean, I think that's a common constant across secondary markets and I think across early stage investing. But
Yes,
I think early stage investing has just become so much more pertinent, right? Because that's the only
yes,
bankable and visible factor that you have, right? And
yes,
predictable as well in certain ways, right? What are some of those things away that you look at? It's a very cliche question, but
yes,
it's uh, every investor has his or her way of looking at the founding team, right? Of
yes,
course, there are very clearly defined aspects, and then of course there are very very small nuances that essentially add to this entire the combination, and you know what I'm talking about, right? What is it
Yeah, yeah.
that you would look at when you look to invest in a founding team?
So what we are looking for and we're constantly assessing when we meet, engage with these founders are a couple of things. One is what is their ability to, what is their commitment, first of all, and I know it's a very subjective thing, but still we try to get a sense of, look,
It's very
do you
important.
have any backup options? This is it. This is, you're going to give 100%, and there has to be a team. So we will never
Right.
fund a single founder. So it has to be 2 or 3 people. So as a team, are you completely committed? And are you, so these are young founders, 24, 25, 26 years of, so they have the runway of 5 years of working hard, living together if required, and building a business. So we want to see that commitment and effort and energy. Then what we want to see is that their ability to fight, how do they react when they have problems, because in startups there are 10 problems every day. You don't know what they will be, but they will be there. They will be
Right.
all kinds of mess. So there are a lot of reasons every day to shut the startup and say, forget it, man, I'll go take up a job somewhere.
Right.
So what is your fortitude level as a team to fight those problems? And
Right.
lastly, and thirdly, we want to see the tech skills. They're very important to us. That if you hit a problem, can you code your way out of it? Can you figure out a way that you can build an API, integrate into a customer, or into iOS or into Android, and figure out your way and overcome that problem? Your tech skills have to be good, and you should be able to attract that tech talent. Because the best coders have right now, it is a great market to be a coder, and especially if you're a good coder, you can command whatever price you want. So what will it attract? How do you attract that talent? How do you keep them? Do you have some kind of an HR strategy, which may not be written down, but saying that, look, I'll compensate you, I'll train you, I'll grow you, there is a career, and then you'll become bigger, and after 5 years, 10 years, you can buy your yacht and island and all that stuff. Is that plan there, for them?
Right.
Now, that's very important, because how do you get these guys?
I agree.
And lastly, we want to see they should be capable of raising the next round, because our capital will never be enough. So are these guys who can be taken to a Series A, Series B investors? Would they excite those investors? Would they tick all their boxes in terms of basic hygiene factors, and be able to raise the next round? So these are some of the things that we focus on. And domain expertise, if somebody comes and tells us that, look, I have spent 20 years in banking industry, now I'm launching this product, is of absolutely no interest to us. I mean, that doesn't get, because it's not about domain expert. No, we have seen that the real disruptors come outside the system. They hardly ever come from within the system, because then they'll tell you, no, this can't be done because this is how the industry works. Whereas the guys who are from outside, like classic example is Khata Book team. The young coders, 6 of them, they resolved the problems that all the bankers I met said cannot happen, RBI will not allow, or somebody will not allow, or some issue will take place. And these guys just, coded their way out of every problem they faced. So I think that is what our focus is as far as, the founding team is concerned.
Very interesting point of it. But just a side point, right? A small point. I think, with the way cost of, for example, coders and cost of technology is kind of increasing, is bizarre, right? And I'm sure that's a matter of concern to you as well, right? You would rather just be using a lot of that money for, say, marketing and engagement and promotions, right? I think it's literally becoming factory cost, right, at many levels, and it's scary, right, at that level. Abhay, towards the end of our conversation, right, what are some of the exciting areas that you're looking at? I mean, everything is looking exciting, right? Especially when you've been in the secondary markets, right, where so many more inefficiencies that are there, right? And like I said, right, you're clearly in a vantage position to, pick up the good ones in the early stage ecosystem, right? Because those are gaps that you've had the opportunity of knowing some of these businesses very, very closely, right? What are the exciting opportunities, according to you, that you are looking at, and of course many others can kind of look at in the Indian ecosystem?
So in the Indian ecosystem, we are basically following the wallet of the young Gen Z customers. So we are trying to assess where are these guys going to spend their money. So stuff like gaming, for instance, online gaming, video gaming, and that gaming at some point of time transitioning into a metaverse for gaming, a Roblox kind of, setup. So we are very excited about gaming as a space. Then
Right.
blockchain-driven innovations, cryptocurrency is of course one use case, but there are many other use cases. So focusing on if what can be the exciting use cases of blockchain technology that we can back.
Right.
We are looking at companies in space tech. Seeing we invested in a company recently. Because what they have done is they have created a product, an intelligent product for corporate customers who struggle to figure out, if they may have a use for satellite feed, but they don't know where
Right.
to go to get that feed and what to do
Right.
with it. So these guys have
Interesting.
created a product that you can subscribe to as a small farmer also, and benefit from that. So productizing the space tech part. Health tech is a very big focus area for us because we're seeing companies that are using, select companies that are doing liquid biopsy for
Right.
even something as serious as cancer. Taking the blood and developing the
Right.
markers to assess, is it what is the probability of your tumor being cancerous versus benign.
Very good.
So these are the areas that and companies especially that are driving out the traditional distribution and supply chains, disrupting the traditional disruption of in whether it's in pharmaceutical or FMCG products or any kind of products, using technology, enabling, creating more transparency into the system and saving anything from 12 to 20% for their customers. So,
Right.
so that is a very low hanging fruit, frankly. I think you will see a lot of startups becoming very successful just doing that. So these are the spaces that we are, very bullish on. Frankly, Ashu, at this point of time, everything that we look at seems exciting.
I know. I think it's a buyer's market in many ways. I think, of course, but
Yes.
that comes with a word of caution. That comes with a lot of intelligence, right? And I think Abhay, like I said, right, and I'm kind of reiterating this time and again that that secondary market exposure and experience and kind of time that you've spent is just so much more important, right? I think a lot of people are like kind of rushing into investing in early stage ecosystem, right, without really realizing
Yeah.
a lot of nuances that play in, right? I mean, India is not a necessarily an easy market to kind of operate in, right?
Yeah.
Shifts are difficult. Shifts are expensive. We have preconceived notions, cultural baggages, right? While you could
Absolutely.
solve for one market, a micro market in India, that might not necessarily be a reflection of what the larger play could be, right?
Yeah.
So I think knowing those indicators, knowing those internal challenges, I think it's just so much more important. And I think not a lot of people are in that zone where they can understand those challenges. I think you uniquely are there. I've had the opportunity of speaking to a lot of people. They are cutting it, bottom up, right? Investing in startups, and then the startups are kind of solving for it, right?
Sure.
I think startups also need a lot of perspective, right? India is not an easy market, like I said, right? They
Yeah.
need a lot of hand holding, especially when you're in a B2B environment, right? Even B2C, for example, is
Sure.
not easy, right? Cultural
Yeah.
diversity is what makes it very, very complicated, right? Thank God there's certain homogeneity now which is coming in, right? Because of, like I said, content, cheap data, that arbitrage is going away. I think those are some very interesting facets, right? Influence, for example, has become so much more important and pertinent in
Yeah.
this kind of in the current environment, right? Abhay, my last question in
Sure.
this conversation. I don't want this conversation to end, right? But my last question in this conversation, it's cliche, right? But if you were to give any suggestion, advice to any of the founders out there, what would that be? I'd take that as a parting away, answer. And I think my sense is a lot of people are going to be watching this. It's going to be very helpful for them. Would love you to answer that.
Yeah, I think my big advice to a lot of founders who are taking their first round of external funding, getting a first investor, is that look, go into it with your eyes open, because what I'm seeing increasingly happen is that a lot of founders at that point of time take money and say thank you, and they are just happy because they have no other option. But once they become successful, then the second thinking comes in that, look, am I giving up too much? Did I get into a good deal? That is not good, because that is not good for your future growth. Because if you rethink the commitment that you made to your investor at that point of time when you needed an investor, and now you are rethinking whether you gave away too much, and how can you scale back? through options or through some other preferential ways, it's not the right way to progress in your career. So think a lot, think, don't sign up immediately, understand, visualize 5 years later what you are giving up, and then get into a deal. Don't if you think you're going to give up, then probably don't do it. Figure out some other ways of funding. That is, and I'm saying this, Ashu, because this is very topical. I've heard a lot of complaints from my peer groups, and that the founders have backtracked on their commitments, and they are become suddenly uncooperative. And maybe it's both ways. I'm talking from my vantage point of view. I'm sure the young startup founders, also have their struggles with early stage investors. So I think from both sides, they need to first, rather than rushing into a deal, spend some time just understanding what they are getting into.
No, I think I completely agree with that, Abhay. I think that's a very, very important point. I think handling money responsibly is very critical, right?
Yeah.
And especially, I think you have to really value the trust that, and that somebody is coming in and kind of and helping you fulfill your desires and dreams, and the journey that you want to sort of have for yourself. I think just so much more important. I mean, I come from a secondary markets background. I come from a private banking background, right? I think there is no tree at the back of anybody's house, right? Where the money comes from. I think you got to be a little more serious, right? Responsibility is very, very critical. And I think integrity in general, I think, is very important. Valuing investors is very important. There are stakeholders at the end of the day, right? If you do it right for them, eventually that will benefit the overall community, right? And I think a very well said point, Abhay. I think that's just so much more important. There's seriousness which is required, right? I think you have to handle money carefully. That goes without saying. Abhay, thank you so much for doing this. This was a spectacular session. Some very, very deep points, right? I love this conversation, every bit of this conversation. Look forward to having you with us much sooner, right? Where we discuss some very specific nuances, right, of how the ecosystem is evolving, and in certain very specific business area sectors, right? And of course, how you're kind of dissecting it, because this is a very, very fluid market that we're in, right? I think our requirements our desires and our aspirations are changing every single day as consumers. I think, by the day, it's going to get all the more difficult for businesses to get into an environment of predictability, which means they'll have to continuously calibrate and recalibrate, right? And that makes your job difficult. But I think that makes your job also very important, because, that evangelization for many others who want to invest becomes very important. So we're going to, do that in the next conversation that we have. Abhay, thank you so much for doing this. It was a pleasure to have you with us. Look forward to hosting you once again much sooner. Thanks for being with us and doing this session.
No, thank you, Ashu. I really enjoyed talking to you. I think you're a subject matter expert. So everything points you made, I don't think there were questions, but the discussion we had, I really enjoyed myself, because I think these are very pertinent points to where we are in this country as the startup ecosystem is just starting to grow. So I think this kind of knowledge to all stakeholders and experiences that you shared, that I was able to share, I think this is very important to anybody who's either already a stakeholder or looking to become a stakeholder. So I thoroughly enjoyed myself. Thank you for having me on this conversation.
Thank you, Abhay. Thank you. Look forward to having you much sooner. Thank you.